Hello everyone. So this video is gonna be all about the London Breakout Strategy. First, I will explain to you what this strategy is and why we are looking at it. Then I will show you how I made it work automatically on TradingView using PineScript. And at the end, we will check out the cash curve, and I will teach you how you can change the code. For example, how you can change your entry point, how you can change your stop loss, so that we can see how it impacts the result. So let's not waste any more time and let's get started. So why should we care about this strategy? Well, it's pretty easy because when it comes to Forex trading strategies, one that frequently pops up is the London Breakout Strategy. And as you can see, you will find tons of information and ideas about how to trade this strategy on Google or on YouTube. So if you go out there, you'll find a lot of content and people telling you how to trade it and how you can be successful with it. Yeah, so I asked myself the same question many of you might have. Is it worth it? Should I give it a try? And what were the historical results for this strategy? And I decided to code it for myself so that I can test it and decide if I should give it a try or not. And afterwards I wanted to create a video to share my experience with you guys. So that's why I'm actually recording this stuff. So the reason behind this video is also that I got frustrated with many traders not sharing their complete backtesting history. And I had also doubts about whether I can trust their results or not. So I was beginning to search for a reliable method that would allow me and anyone to test it for themselves and verify if what I'm saying is valid or not. And that's actually how strategies on TradingView work. So I won't explain the entire background of this strategy in detail, since most of you are probably already familiar with it. Otherwise, you can just look it up on the internet. Instead, I will show you live results and provide you with a tool, which is my PineScript code, so that you can backtest the strategy whenever you want to. So for example, if you happen to watch this video, let's say 1 year from now, and you want to see how the London Breakout Strategy has performed within the last couple of months or weeks, you can use this code and copy and paste it into your own TradingView account and then just check the results. So that's actually pretty cool. So, however, let me summarize the London Breakout Strategy in a nutshell. So now we're going to take a look at the rules for the London Breakout Strategy, or what the London Breakout Strategy actually is. It involves identifying key price levels based on the Asia session right before the London session opens. So these key levels are typically the high and the low of the previous Tokyo session, and if a breakout takes place during the London session, we will just simply follow the trend. So let me demonstrate that for you. First of all, we need to know, okay, when does the Tokyo session take place? Because we want to identify the key levels during that session. So if you look it up, you will see we always focus on UTC, which is the same like GMT. Tokyo, which is the most important session during the Asia session, opens at midnight and closes at 9 a.m. And London opens at 7 a.m., closes at 4 p.m. So there's an overlap of 2 hours. And that's also the reason why we choose this time range from midnight till 7 a.m. because we want to identify the key price levels before the London session opens, and London opens at 7. So as you can see here, this let's say this is our Tokyo session. We have our low and our high right here. We mark this, and then we put our entries right above the high and above the low, below the low. And our entry signal is that we have to wait for a body of a candle to close outside of this range. So this would be the first candle that actually closes outside of the range. So we enter the trade with the opening of the next candle. So let's say it's here. So let's take a look at our stop loss. It will always be right in the middle of the Tokyo session. So we just divide the range by 2, and then we put our stop loss right here. For example, if we enter a long trade here, our stop loss will be right here. If we enter a short trade somewhere here, our stop loss will be somewhere like here. And our take profit will always be somewhere so that our risk reward ratio is 1. And my code, my PineScript code also includes that we will exit the trade at 11 p.m. because we want to close every trade before the next Tokyo session opens. So remember, this isn't a financial advice, it's just one way people use this strategy, and if it makes sense or not, we will check the results later when we take a look at our cash curve. So let's take a look at a real example, so just to be sure everyone understands it. We are using the Euro-USD chart on a 15-minute time frame, but we will also explore other markets and time frames later in this video. So first of all, how do we identify the Tokyo session? Well, you can use an indicator on TradingView called sessions. I will show you this one. So that's actually the one I'm using. You can just use the same one and then activate it. And as you see, it will automatically show you the sessions. Let me show you this one. So I already selected the London and the Tokyo session, and I changed the time frames so that it fits perfectly to the UTC time. But let me show you. So as you can see, this session starts at midnight and ends at 7 a.m. So this one is our Tokyo session, and this one goes till 4 p.m. So this one is our London session. Remember, normally the Tokyo session ends at 9 a.m. but to us it's important that we identify the key levels before the London session opens. So we mark our high again, we mark our low again, and we see, okay, this candle took place from 7 till 7:15. It closes outside of our range, as you can see here. It closes below the Tokyo session. And so we enter a short trade right at this point and just follow the trend. Let me show you again. So our stop loss would be somewhere right here in the middle of the Tokyo session, and then our take profit would be somewhere like here. So that's just the same distance from our entry point. Let me just show you. Entry point would be here, and there's no stop loss. No, we won't be stopped out, but our profit or take profit would be reached. So this is actually where we closed that trade with a profit. And now let's take a look if my strategy that I coded does the same. So before we jump into it, I just want to remind you that there are countless variations of this strategy, okay? So some traders are using indicators like the MACD in combination with it. Others are using a 30 minutes time frame, or other entries and other stop losses. But the strategy, how we are testing it right now, is like the most common, I would say. So let me show you how I started with it. We're gonna activate our London Breakout Classic. This is our cash curve. We will take a look at it later. Because first of all, I want to explain to you what this strategy actually does. This is how it looks, guys. So, as you can see, there's a box drawn on our chart that displays the exact range of the Tokyo trading session. And we can check this. Let's see. It starts at midnight and ends at 7 a.m. So this box is colored red if the trend during the session was downward, and green if the trend during the session was upward. And then the next thing, remember, is let me show you an example which demonstrates this pretty good. Yeah, so this one works pretty good. So we wait for a candle body to close outside of this range to enter a trade with the opening of the next candle. Just remember that. And as you can see, there was a breakout right here. So this candle is the first one who closes underneath this range. So we are opening a trade right here. If we would just say, okay, we need a breakout, then this candle, this one here, that worked as well, because the low already crossed our range, or left the range. But yeah, we defined it a little bit different, but we will change it to another setting later in this video when we take a look at the code. Now let's talk about the red line. So as you can see, the line is automatically placed in the middle of our previous range, and it works as our stop loss. So if we cross this line after entering a trade, we will just stop out. Yeah, but let's take a look. An example. So here, this one works. So we entered the trade right here with the opening of this candle. It went all the way against us and it reached our stop loss right here. This is where we close our trade automatically. Yeah, so this code also calculates the exact distance between our entry point and the stop loss. So for us, it's always important that we maintain a risk-reward ratio of 1, meaning that our take profit is always the same number of pips away from our entry as the stop loss. And I'm going to show you this as well. Okay, so we are entering the trade right here. Let's zoom in a little bit so that we can see it better. So entering here, our stop loss is 9.5, 9.6, something like that, pips away, and our take profit is at 9.5, 9.6, something like that. So it works perfectly. Something else you have probably noticed is the green background on the chart, and the green background represents the London trading session. Yeah, so it goes from here 7 till 4. So my code allows us, or my PineScript code allows us to only make entries during this time. If we haven't entered a trade, any pending orders are cancelled automatically. And I've also programmed a timeout, like I said, at 11 p.m. to make sure every trade is closed before the new Tokyo session begins. Yeah, so as you can see, the code works perfectly. Now let's check the results. So let's take a look at how the strategy has performed over the past few months. And to get the results is super easy. You just click here and then you get your cash curve. And yeah, as you can see, we made a total of 113 trades within, let's see, you can easily check it here. First trade took place at the beginning of April, and last one this week. So it's April, May, June, July, August, a little bit more than 5 months. And during that time, we had a success rate of almost 54%, profit factor of almost 1.3. And yeah, we made a net profit in pips. This is important, guys. TradingView, I don't know why, but if you check Forex markets, it does not show you the result in dollar. It shows you the result in pips. And this is equal to $2,240 if you always trade one lot. And I put my initial capital, you can choose this when you select a strategy, to $10,000. So it equals a return of almost 22% within 5 months. Actually, pretty good. I mean, it's okay. Yeah. It's an okay result. But let's talk about the cash curve a little bit more. So one thing I don't like about this is that it represents kind of an emotional roller coaster, because our peak was reached almost right here after the 36th trade, and from there it's been a series of ups and downs for the next 70 something trades. So dealing with this kind of volatility can be challenging in real life, let me tell you that. But yeah, however, we will find ways to improve this cash curve if we change variables in our strategy. But how we're gonna do this and how we find the best option, I will show you this in another video. So TradingView, like I already showed you, provides you also an option to review every single trade, which is actually pretty nice, because you can just jump right into this trade on the chart. So you just click on it, and as you see, the chart moves right through this trade. And that's actually pretty cool, because you can check if significant losses or gains were caused by news events or other factors. And that's something I really like. But yeah, let's see. Let's see how this strategy actually changes when we choose another time frame or another market, because this one is also pretty easy. So for example, let's select the British pound US dollar, and I mean the rules are exactly the same. We select the Tokyo range, we select our entry point, stop loss, risk reward ratio of 1, and you see you get a totally different cash curve. Same goes with if you change the time frame, totally different. Same with the euro and US dollar. And one thing I need to mention is why does the total closed trades change? Why do we get more trades if we are looking on a another time frame? Well, that's because TradingView is offering only a fixed amount of candles to go back in time. So for my account, I think it's 10,000 candles, and so the time frame is different. If I'm looking at 10,000 candles on a 30-minute time frame, it's a longer period of time than if I'm looking at 10,000 candles on a 50-minute time frame. So that's a little bit tricky. I mean, if you upgrade your account, I think you can go back for like 20,000 candles. But yeah, that's something that kind of sucks a little bit. But yeah, this is just something I want to show you. And another thing is, you can, if you go to this code, you can also change the risk-reward ratio. So for example, let's put it on 2 and see how it's changed. And you get the results immediately, which is pretty cool, I think. So you can just see, okay, what works the best. Totally different cash curve. And let's change it to 1 again, so that you see how this works. Yeah. So, all right, guys. Last but not least, let's check the PineScript code. So first of all, I'm not a software developer. I just taught myself how to code this strategy. And I can tell you that if you put some time and effort in it, it's not that complicated. So if I can do it, you can do it too. One thing I need to let you guys know is that I will make another video especially focusing on this PineScript code of this strategy in detail, because right now we don't have the time for that. But what I would like to demonstrate you is how simple it actually is to modify some variables and see how the results change. So let's take one example. As you remember, our entry point is always, or our entry signal is that a candle body needs to close outside of the range, right? So let's change that to that only the high and the low of a candle, or the low of the candle, needs to cross the range. So for example, if the high of a candle crosses the high of the Tokyo session, then we enter the trade within the next candle. Doesn't matter if it closes outside the range or not. Same goes with a short trade. So let's save this. But first of all, let's take a look at the strategy again. So see, as you can see, this is how it looks now. We're going to save this. And it's saved. And the strategy changed a little bit. So there's less net profit, more trades, a lower success rate, and a little bit higher profit factor. So let's take a look if it actually works. So that's actually a pretty good example. As you can see, this is our Tokyo range, and this candle, or I mean the low of this candle, crosses the low of the Tokyo range, which is why we enter a short trade with the opening of this candle. So it works, and we could also modify it so that we say, for example, the low needs to cross the low of the Tokyo session plus X amount of pips. This is something that we can do as well, but for now that should just work as a demonstration how easy it is to actually change it. Yeah, and as you can see, it's quite straightforward. Lastly, a quick reminder, I'm not a financial advisor, so please always exercise caution when dealing with your own money. But yeah, that's basically it. So guys, I hope you liked this video, and if you want my code for yourself, just drop me a message or leave a comment under this video, and I'll be more than happy to share it with you. So you can just easily go to your own TradingView account, just click on Open, select a new strategy and copy and paste right into it, and then save it, and then you have it. And you can play around with it a little bit, so that's actually pretty easy. So besides that, feel free to leave a comment under this video which strategy I should code next, because I want to do more videos of this kind of stuff. So thanks for watching, and see you next time.